Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about MALIBU BOATS INC quarterly report. MALIBU Boats Inc. offers a diverse range of businesses and services, including designing and engineering recreational powerboats, manufacturing various types of boats under several brands, plus Malibu plus Axis plus Pursuit plus Maverick plus Cobia plus Pathfinder plus Hughes plus Cobalt marketing, and selling performance sport boats, sterndrive and outboard boats, providing products for recreational boating activities such as plus water sports, wakeboarding, water skiing, wake surfing, plus general recreational boating, plus fishing. The company operates through three segments: Malibu, saltwater fishing, and Cobalt. MALIBU Boats Inc. stock price drop. A confluence of negative news and challenging market conditions. MALIBU Boats Inc.'s stock price has plummeted by 36.56% in the past year due to a combination of weak outlook, challenging financial performance, and market conditions. The company's announcement of a flat to down mid-single-digit net sales for fiscal year 2026 overshadowed its strong third-quarter earnings, leading to analyst price target cuts. Weakening retail demand, high interest rates, and an inventory overhang have contributed to the decline in revenue and EPS. MALIBU Boats' operating margin has remained negative, highlighting ongoing profitability challenges. The company's sales have been impacted by a decline in boats sold, averaging 28.5% year-on-year declines over 2 years. Analyst downgrades and concerns about declining financial performance and economic headwinds have further contributed to the stock price drop. Macroeconomic slowdowns, acquisition missteps, legal battles, and underperformance compared to market and industry averages have also added to the company's woes. The primary drivers of revenue growth or decline can be identified through an analysis of the company's financial summary. Revenue growth is primarily driven by a net sales increase, strong performance in the U.S. market for performance sport boats, new product development and improved distribution, increased market share across boating categories, and a strong dealer network and ability to increase production. On the other hand, revenue decline can be attributed to a decrease in net sales from the saltwater fishing segment, lower retail activity and wholesale shipments in this segment, and decreased unit volumes in the cobalt and saltwater fishing segments. Net income and profit margins. A shift in fortune. The financial performance of the company has undergone significant changes between 2024 and 2025. Initially, net loss decreased from $5.048 million to a net loss of $702,000, indicating an improvement in financial health. However, this trend was short-lived, as net income increased by $5.5 million for the 3 months ended September 30, 2025. Profit margins also experienced fluctuations. Gross margin declined by 210 basis points from 16.4% to 14.3%, while operating expenses as a percentage of sales increased by 40 basis points to 3.2%. Nevertheless, profit margins improved due to a decrease in provision, benefit, for income taxes and an increase in adjusted income before income taxes. The turnaround in net income and improvement in profit margins can be attributed to the company's ability to manage its expenses effectively and reduce tax liabilities. This shift in fortune is a positive sign for the company, indicating potential growth and stability in the future. The company's financial performance indicates a consistent generation of positive operating cash flow. The net cash provided by operating activities for both the year and the 3 months ended September 30, 2025, is $6,535. This demonstrates a stable ability to generate cash from its core operations, which is a key indicator of a company's financial health. The company's financial performance has undergone significant changes in certain areas. Notably, the interest expense has decreased by 52% from $15,515 in 2024 to $7,469 in 2025, as per page 28 of the summary. This reduction is a positive indicator for the company's financial health. However, there are mixed signals regarding the debt level. While total debt increased from $18,000 to $23,000, page 18, the revolving credit facility outstanding decreased significantly from $350 million to $23 million as of September 30, 2025, page 40. Overall, it appears that the company's interest expenses have decreased, but its debt level has not changed significantly. Management's outlook and strategy overview. The company expects favorable industry trends and demand for its products despite challenges from macroeconomic conditions, competition, seasonality, and regulatory requirements. To increase market share, the company will focus on new product development, improved distribution, and innovative features while maintaining leading market positions through strong brands, dealer networks, and production capacity enhancements. Management is confident in the company's financial position, with sufficient cash on hand to finance operations for at least 12 months. The company plans to continue investing in new models, capacity enhancements, and vertical integration initiatives. With a manageable debt level and flexibility to borrow, the company is well positioned to execute its growth strategy and navigate future challenges. The company has engaged in share buybacks, as evident from various references in the financial summary. Specifically, a stock repurchase program was authorized for up to $50 million, and shares were repurchased under repurchase agreements. However, there is no mention of dividend payments being made to shareholders. This suggests that the company's primary method of returning capital to its investors has been through share buybacks rather than dividends. Concerns about inventory buildup and supply chain disruption are evident in the financial summary. Inventory levels have increased significantly, with a notable rise in dealer inventory levels in the cobalt segment. This is further exacerbated by purchase obligations of $71.9 million due within the next 12 months. Supply chain disruptions also pose a significant threat, with suppliers' operations being impacted by various factors such as material shortages, trade policies, and global economic uncertainty. Lower wholesale shipments in key segments have already been observed, indicating potential supply chain issues. These concerns highlight the need for careful management to mitigate risks and ensure business continuity. That concludes the financial summary for MALIBU BOATS INC. Feel free to comment below, and I will be happy to answer them when possible.